and welcome to a brand new series called NSE FinWiz, powered by CNBC TV 18, where we travel the country to meet young professionals across various sectors and organizations. We get our experts to give them sound financial and investment advice so that they get the maximum bang from their buck. To flag off the series, we're in the heart of Gujarat in Ahmedabad. We begin this series at an urban cooperative bank called the Seva Bank in Ahmedabad, which was set up in 1974 for women who work in the unorganized sector.
Self-Employed Women's Association, or Seva as it's popularly known, is an organization and a movement that provides an excellent work structure for women in the unorganized sector who want to create a niche for themselves in the society. One such sister organization of Seva is Shri Mahila Seva Sahakari Bank Limited that provides suitable financial services for socio-economic empowerment and self-development of women below poverty line. Focusing on our theme for the series, we gauge thoughts and notions of young professionals of Seva Bank comprising of women to understand their approach towards investments and financial planning.
I have done a very rough research about my income and my spending activities. So I have come to a conclusion that I am almost spending around 30% of my income. So 70% is usually being saved. And regarding saving, I would say that mostly looking towards the current market situation, I'm preferring banks, giving most priority to the banks for my investment.
Currently, the portfolio of my savings consists of fixed deposits and gold, and I do prefer gold over fixed deposits because with the rising prices in gold, I do prefer gold savings as better.
Someone can help in that and they can handle the whole portfolio. We can give the direct payment to them, and that is only possible, but we cannot directly go and check all that things and then after we can invest some things.
With a raring to go attitude, these budding professionals of Seva Bank were enthusiastically looking forward to the forum with our financial experts to take in the advice and pose their queries on smart financial planning.
That will be a very good opportunity if I'll be having such kind of experts for my investment decisions. So I'll try to learn from them how they analyze the market, what they actually try to look into the market for taking their decisions regarding investment, and what are the various risk return opportunities or risk return coincidences which they used to consider.
The financial experts which are coming to Seva Bank, I would just want to know about that because number of IPOs and number of companies is coming, so where to invest, how to invest, and what are the procedures to invest, and where our money is secured and we are getting the maximum return of our money.
Well, we're now at the head office of the Seva Bank in Ahmedabad, and I'm joined by two very special guests. First up, we have Mr. Pankaj Matpal, who's a certified financial planner and also the director at Optima Money Managers. And we also have Mr. Roongta, who's the CEO of Apnapaisa.com. Thank you, gentlemen, for joining us here. Harsh, my first question to you is, there are a lot of common mistakes that people make while investing. Throw some light on some of those.
I think if I was to pick up investing as a category, I think what you do before investing is probably, if not more, at least it is as important as investing itself. Before you even begin investing, you need to make sure that any of the risks that you have to invest, right? You need to make sure that those risks are covered, because any investment plan that you will do can get completely derailed. If, for example, if you are the person earning, okay, if you were to die, or if you or somebody in the family is going to be hospitalized. Now, unless those risks are covered, I may start doing investing, right? And if this risk comes, and those risks come, whether we want to talk about it or we don't want to talk about it. So I think, just like as in cricket, if you want to be a good aggressive batsman, you need a great defense, and I think to be a good investor, you need the defense of insurance, which is life insurance, health insurance, etc.
And the common misconception, I believe, is that people consider insurance to be a part of their investment.
Absolutely. So that was the second thing. So insurance is normally mixed with investment. It does not make sense. Like somebody says, don't mix it. You neither get good insurance nor do you get good investment. So when you take insurance, take insurance. And when you invest, invest.
Pankaj, now a lot of the people here are new investors or are relatively new investors saving and they've started investing, throw some light on the different asset classes that one has as options to invest in.
See, before coming to this asset classes, I will say whenever you invest, the most important thing is that you should understand product. One product which is good for somebody else may not be good for you. When you determine the asset class or investment product, your objective of investment, risk appetite and investment horizon, that is very important. If you are investing for short term, then equity may not be a good product. But if you have long term goal, you are investing for long term, then definitely we have always seen that in long term, equity has outperformed other asset classes. So we cannot say that equity is bad, equity is risky or FD is bad. All products have its merit and demerits. But for whom it suits, for whom it is good, that is important.
Now we're here at a bank. All of them are bank employees. So it's obviously they must be, or they know of FDs very well. It's in their comfort zone. They do that on a daily basis. So I'm sure they must be thinking, I have my FD, I have my money in FD. Why should I invest in the stocks? Why should I invest in gold? What's your answer to that?
I think bank FD is an excellent asset, right? And obviously that is why we have so many banks, and we have close to, I think, 80 lakh crores of FD in the system. So obviously FDs is an excellent instrument. It serves a certain purpose. But when you put money in FDs for the long term, for the real long term, 5 years, 10 years, think of it as money that you have put in a safe which has got a small little mouse inside it. Okay, and that mouse is slowly nibbling away at the money. Even as the bank is adding some interest to it, they open the safe and add money every quarter, but there is this little mouse inside that safe which is nibbling away that. So at the end of 10 years, if the mouse has nibbled away more than what the bank has added, you may end up with less money than what you had started with. Now this mouse is inflation. So this is okay. I mean, it's okay for 3 years, 2 years. Sometimes it's okay even for long term for certain people. But clearly, so everything has a certain place for a certain need. So if I know for sure that at the end of 3 years I need money, then possibly FD is the best way to save that, so that I know I will get that much money. I will live with that mouse. I will estimate how much that mouse is going to take away and save that much.
And how would you advise them to move again from FDs if they want to start taking some of their portfolio and start moving out of maybe just FDs and going into say stocks or maybe gold? What are the couple of steps that they need to take?
See, first thing, when we invest, any instrument we select, your liquidity, returns and safety. You are concerned about 3 things. But you all know that if you want to generate a little bit extra return, then you have to be ready to take extra risk. But how much extra, that is important. So it is not always returns are important, but also it is risk adjusted return what is important. So now the question what is said that how to take step, or before that I just want to add one more thing. What he said that one is inflation which eats out your returns and also tax. When you invest in fixed deposit, if suppose you get 9% interest and you are in 30% tax bracket, so you are paying 2.4% out of that 9%.
There are two
so
mouses.
Exactly. So only 5.6% come in your hand. If I take average inflation of 8% and you get net 5.6%, it means you are not able to beat inflation. So it means the purpose of investment will not be achieved, because when you invest, you sacrifice your current expense, you sacrifice your current consumption, so that you invest some money which will help you achieving your future goals.
Don't go anywhere. NSE FinWiz powered by CNBC TV 18 continues after this short break. Welcome back. You're watching NSE FinWiz powered by CNBC TV 18. So Harsh, Pankaj spoke about mutual funds, but shed some light on ETFs, exchange traded funds.
An exchange traded fund is a mutual fund that is like a share. It is traded on the exchange as well. An exchange traded fund can be a gold exchange traded fund, can be an equity exchange traded fund, can be a liquid exchange traded fund. It can be anything. Most popular is the Nifty, for example, the Nifty exchange traded fund. There are many Nifty exchange traded funds. There are many gold ETFs. So again, if you prefer investing in an exchange traded fund, the advantage is you can buy and sell during the day. Whereas if you invest in a regular equity fund or a regular gold fund, you have to invest through the mutual fund. If you invest in the ETF, you can invest through your broker.
I want to talk to you, Pankaj. Now, since he's touched upon ETFs and exchange traded funds, but investing in the markets, when is the right time? How do you know when is the right time? How does the layman know, as the first time investors in markets, how do they know now is the time to go buy?
See, first thing, it is almost impossible to time the market. So nobody can time the market. It is only you buy and invest some time in the market. So that is better. You wait for some time and then you will get return. Second thing, whenever you invest, we all know that buy low, sell high. Okay. But when is the low, how you know that? So if you are buying any stock, you should know that what is the valuation of that stock. So little bit research you have to do, or you have to take the advice of a financial advisor who knows about that. Then you can decide. When I say financial advisor, I don't mean to say stock broker, because his job is just to help you buying and selling the stock. When I say advisor, means he should advise you what is the correct valuation of that stock and when should buy.
So how do you, sorry, but how do you get a good financial advisor? Because most of us, me included, I'm sure people here, is I go to a friend suggests, a friend will say, okay, you know, this is a tip, this stock is going to go through the roof next week, buy and sell. How do I know who's the right person to go through? Because this friend might also be wrong.
See, this is the problem, because usually, as you said, I fully agree with you that people buy with tips of friends and relatives. Now, when gold was at 32, people were saying that it will touch 50,000 now per 10 gram and you buy, and a lot of people were buying. When it came down to 25, people said no, it will go to 20 now, don't buy. Same happened with equity. When in 2007 markets were at peak, everybody was rushing to buy. When in 2009 it was almost bottom, and actually the people who invested in 2009, they have multiplied their investment in last 4 years, 5 years. So the thing is that when we believe in hearsay, whatever friend says, relative says, then chances are there that you make mistakes. Then how to find a good advisor? Now that you have to do your research, you have to take the references, you have to see the qualification of that person who is advising you. Is he really qualified to advise you? That is important. Just anybody says that he is an investment advisor or financial advisor, but what is his qualification, how much experience he has, or you know anybody with his advice he has taken right decision. That is important.
Harsh, you had a point?
So I think two things. I just want to add on to what Pankaj just said. I think in terms of timing, today is a good time to invest. Yesterday was a good time to invest. Tomorrow is a good time to invest. Okay. I don't think, unless it is your profession to study, right, you should be even trying to time the market. Right. I don't think anybody can really time the market. So I keep coming back that for most people it is systematic, it's a discipline. Just keep systematically investing. The only mutual fund or asset class that you can invest lump sum, okay, is either your bank fixed deposit or a debt mutual fund or a bond. That is the only place where you can invest one shot, one amount. And there you don't need to bother about timing, although sophisticated investors have had losses there also, right? The key is on equities, balanced funds, gold, okay? Every time is a good time as long as you do it on a disciplined basis month after month, okay? So that, I think, choosing which fund to do it in, you might need to do your homework, which is where I think a financial advisor comes in. So just like whenever you go for any advisor, when you say choose a doctor, okay, or when you choose any professional advisor, a lawyer, there will be certain things that you will see, right? One is convenience. There is no possible use for you for a lawyer even though may be very good if you have to fight a case in the Gujarat High Court, but the lawyer is situated in Bombay, right? Fortunately now, because of distances not being an issue, today advisors can be anywhere.
Don't go anywhere. NSE FinWiz powered by CNBC TV 18 continues after this short break. Welcome back. You're watching NSE FinWiz powered by CNBC TV 18, and now we'll take some questions from the audience for our experts.
You just talk about so many options which are available for investment. I just wanted to ask that what are the available sources through which we can make this study, that what are the best options? What are the various sources from which we can gather information regarding these options? And the other question is that what are the factors we need to consider when we want to decide that what is the option that we can invest, taking risk, return, etc. into consideration?
You first need to decide, why do I want to invest? Okay, and because that decision, okay, will determine on what kind of asset you should invest in, therefore within those assets what particular product you should invest in. Now as far as sources are concerned, I think now given the proliferation of media, I mean internet is the best source. I mean you just need to spend some time, right? And I think you will be able to figure out that what kind of things you need to do before you start investing. It can be a great first source.
I'll add to this, before you determine any product. See, usually what happens whenever money comes, then you think that where to invest, and that moment, if there is more noise for equity, then you will invest in equity or otherwise in gold. As I said earlier also, when gold was at peak, everybody was investing in gold, and same happened with equity. But that is the wrong decision or wrong way of investing. Always first set your goal. Without setting your goal, investment has no meaning actually. So first set your goals. Goals may be like in anybody's life, in a personal finance, child education, buying a big car, buying a house, retirement planning, vacation planning, these are the goals. So whatever goal you set, then you know the time, how much time is left for that goal.
Go ahead.
Hi, I am Bhumika. I just want to know, actually we already discussed about the ETF, and usually I am doing investment in gold, in physical gold. But if I want to go with ETF, how much I can invest in the ETF, and where can I get the whole information regarding ETF?
See, information you can get on the website of NSE. You will get information about gold ETF there itself. And second thing, you ask about how to invest. For that you have to have Demat account and trading account. So usually nowadays any broker has joint, means he will also help you opening a saving account. So saving account, trading account and Demat account, because cash transactions are not allowed in market. So that is why from saving account you have to pay money, and when you buy it will come in your Demat account, and you have to have a trading account because through your broker you will trade in that. And how much minimum amount you have to buy in the lot of 1 unit, and 1 unit represents 1 gram of pure gold. So whatever price that time of 1 gram gold, equivalent to that you should think that you have to invest.
मेरा नाम अर्चना है और मैं ये पूछना चाहती हूँ कि जब मार्केट का डाउन होता है तो कोई भी अच्छी प्रोडक्ट हमने ली हो, चाहे वो म्यूचुअल फंड हो या SIP प्लान हो, नेगेटिव रिटर्न ही देता है, तो तब उस टाइम ज़्यादा बेनिफिशियरी क्या रहता है?
जब मार्केट डाउन है उस समय अगर आप सिस्टमैटिकली इन्वेस्ट कर रहे हैं, उस समय आपकी वेल्थ बन रही है, बंद मत करिए उसे, ठीक है? अगर आप 1000 रुपया हर महीने डाल रहे हैं, राइट, तो जब उसकी यूनिट की वैल्यू या शेयर की वैल्यू आप पकड़ लें, अगर शेयर की वैल्यू 20 से घट के 10 हो गई है तो आपको डबल मिलेंगे शेयर्स उसी 1000 रुपए के लिए। ओवर पीरियड ऑफ टाइम रिसर्च ने दिखाया है कि 10 साल का अगर आपने कंटिन्यूअसली इन्वेस्ट किया है डिसिप्लिन तरीके से तो रिटर्न मिला है। तो एक आम इन्वेस्टर जो है ये रिसर्च मेरे हिसाब से उसको करना बहुत ही डिफिकल्ट होगा कि इस डाउन मार्केट में मुझे क्या करना चाहिए, अप मार्केट में मुझे क्या करना चाहिए। हर मार्केट में आपको एक ही चीज करनी है, इन्वेस्ट करते रहिए रेगुलरली।
Well, those were the women at the Seva Bank in Ahmedabad who had quite a few questions from our experts, and I think our experts have really given them a better perspective on financial planning. That's all from the NSE FinWiz powered by CNBC TV 18 this week. Catch us next time in another city with another set of young professionals. Thank you for watching.